Yo, what's up, everyone? Crypto Henry here, and I'm going to bring you some news about Bitcoin and how do I see the Bitcoin price at the moment. So, Bitcoin recently went from $30,000, where it has been for a few months, to 26,000. It dropped like 10% in one day. But why did it drop, and how can you take advantage of this? And later, I'm also going to show you some charts that will give you some reassurance and give you some guidelines on what to do regarding the Bitcoin price at the moment, how to take advantage of it. But why did the price dump? Well, for first, there was some Federal Reserve meeting minutes that were released and that showed that the Federal Reserve might hike the interest rates at least one more time. Instead of pausing, they might hike once or twice more, which is going to be hard on the economy. Uh, Increasing the interest rates will increase the price of money, the price of loans. People will have less money in their pockets, will consume less, will invest less. And for that reason, people sell riskier assets because these riskier assets are the most impacted by interest rate hikes. Because basically, the risk free rate is the Federal Reserve funds rate, which at the moment is like what, 550, 575. It might go like to 6%. You can put your bank in treasury bills or in a savings account and get a better rate. So why would you have your money in riskier assets? Basically, that's the thing behind it. And another reason was that there was some news, although I don't think this is confirmed, that SpaceX, Elon Musk have sold like a few $1 million worth of Bitcoin. And although this was not confirmed, people were also kind of fuzz on the news. And then finally, Evergrande, which was one of the biggest construction companies in China, declared bankruptcy. And this means that Evergrande, this huge Chinese company, is not going to pay to their suppliers, which is bad for the Chinese economy, which is bad for the world economy, and people will invest less. So that's basically why the price dumps. And while the price was declining, probably there were also some people that were leveraged and got liquidated, which makes the price being even more volatile. But is the price going to continue to drop? So let's jump here and look at the charts. Okay, let me be smaller here. So what we have here trading view. And first, what I want to show you here is that you can see that we had here a low, right? And we have higher lows. So this is a chart from late last year, and we had here this low, and then we have a higher low, and a higher low, and then we have this that might be, if it rebounds again, it might be considered a higher low. And having higher lows means basically that the bulls are winning over the bears, right? And really, don't forget that if we look at the price range from the beginning of the year until now, although the price dumped quite a bit, Bitcoin is still up like 58%, okay, from the beginning of the year. So we cannot say that we are in extreme bear market, I mean, right? So we have higher lows, which is good. And what else I want to show you here? We have here at the bottom, we have RSI, Relative Strength Index. And what RSI is telling us is this is like extreme oversold. Whenever RSI is below 30 or below 25 or something like that, you can consider that is oversold. What does that mean? It means that there is the bears, the people that are selling are losing steam. They cannot continue to sell much more. There is not much more liquidity in the market to sell. So this translates basically into the fact that the Bitcoin price might rebound. So it's not very likely that will continue to fall, at least at this speed. So it might fall more further. Okay, the price now is at 26. It might go to 25. It might go to 24 to 23. I don't know, but it's not going to go straight to those lines, those prices. It's more likely to rebound and if it is to fall, going to fall further after that. But it's not going to continue to fall at this speed because basically there is no liquidity to sell more at that speed in the market. And I think you can take advantage of this, because next year we have the Bitcoin halving. So the Bitcoin supply will be decreased by half. So even less Bitcoin issuance, meaning more scarcity for Bitcoin. And when you have a supply and a demand of an asset, right? And in Bitcoin case, you have a very strong supply in the supply is very inelastic, very strongly inelastic, meaning that no, doesn't matter how much more demand you have, the supply is always the same, right? If you are in the car industry and there is a lot of demand for cars, car manufacturers will make more cars. If you are in the cake industry, if there is a lot of demand for cake, bakers will bake more cake. But Bitcoin, you cannot produce more Bitcoin. So if there is more demand for Bitcoin, we have basically the same supply, and the supply is programmatically defined, and basically from the next year, April to 2024, we'll have the halving, so the Bitcoin mining rewards will be reduced from the currently 6.25 Bitcoins every block, every 10 minutes, to 3.125. And this is good to decrease basically the supply even further. And the supply of Bitcoin is now, the inflation rate is way less than gold. For example, if you compare it to gold, the gold inflation rate has been between 1 to 2% over the last 100 years. And now Bitcoin is even lower for the people that compare it to gold. And another very, 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 very important thing is this. Okay, what do these companies have in common? Vanguard, Fidelity, BlackRock, uh, Wisdom Tree, ARK Invest. What do they have in common? We have the top asset management companies in the world. They have like trillions of dollars under asset management. What do they all have in common? BlackRock, Fidelity, Vanguard, Wisdom Tree, ARK Invest. What do they have in common? They are all applying at the moment for Bitcoin spot ETFs. And the SEC is likely to delay their decision, but most likely early next year, April, I don't know, they will most likely approve Bitcoin ETFs. And this will have a huge impact again on the demand of Bitcoin. Because just for your reference, GBTC, the Grayscale Bitcoin Trust, they own at the moment around 3% only of the Bitcoin supply. Although GBTC is kind of small, they own 3% of the Bitcoin supply. MicroStrategy, Michael Saylor have been buying a ton of Bitcoin. I think they bought around 150,000 Bitcoin, which is like 2 point something, close to $3 billion. And that's only 0.7% of the Bitcoin supply. Now imagine that you have BlackRock, Wisdom Tree, ARK Invest, Fidelity, Vanguard, all buying Bitcoin for their Bitcoin ETFs and opening up to endowments, pension funds, and so on. What is going to be the impact in the Bitcoin price, knowing that the Bitcoin price is already very sensitive to demand, considering the supply is very scarce? Well, I guess it can only go up, right? So, saying this, let's now look at the charts and why do I think this is a good opportunity to buy Bitcoin. Of course, this is not financial advice, blah, blah, blah. But what I like to do is whenever prices are more depressed, I like to do some dollar cost average. But should you do dollar cost averaging all the time or not? And my answer is no, you should not do dollar cost averaging all the time. You can kind of time your dollar cost averaging. So I'm not going to try to time the market buying the bottoms and selling the tops because that's very hard to time. But you can have a general idea when the market is cheaper and it's good to increase your dollar cost averaging. Okay. So what I like to do is, well, you can use some basic moving averages, but I have created this indicator here, my Bitcoin DCA indicator, and I'm going to put it like here from the beginning of the year. And basically, this Bitcoin DCA indicator is based on 3 moving averages, which are, what are the moving averages that I'm using here? Let me check. 30-day, 60-day, and 200-day moving averages. And whenever the 30-day and 60-day moving average it goes below the 200 moving average, we get a green chart. And the greener it is, the, the more moving averages you have below the 200 moving average, right? Basically, the cheaper Bitcoin is. And what we see here is that basically, if you buy Bitcoin whenever the price, whenever you see the green chart, it means that it's a good time to buy. So I would be dollar cost averaging during this period of time. Sorry, during this period of time here, you have the green, and then it goes up. I'll stop doing dollar cost averaging, and then I do it again during these periods, and then the Bitcoin price goes up. I'll stop, and now I'll be doing more dollar cost averaging. And whenever you have this bright green, you can do more stronger, more aggressive dollar cost averaging. So what I do is I buy Bitcoin every single day, right? And when you have the light green, maybe I'm buying $10 per day, $10 worth of Bitcoin. And when you have the more bright uh, chart, I will buy like $20 per day or $50 per day. You can basically increase. And this works pretty well, you know, like if I put here the 5-year chart, what we see here is that during this period in 2018 and 2019, you will be buying Bitcoin and you will have a very nice bull run. You don't need to buy Bitcoin when the price is going up so much, right? But when you have these green areas, this is like a very good indicator to help you with your dollar cost averaging. And I have made already some calculations before that showed that actually using this strategy, it really gives you very good results. And I also want to share this slide over here. This slide is from my crypto investing course on Udemy, where you can check tons of interesting investing strategies, winning investment strategies in crypto. I'm going to leave the link for the course in the description, and it's a discounted link, by the way. You can buy the course at the lowest price. But basically, what we see here, what I have made here is that I made different dollar cost averaging strategies: daily, weekly, and monthly. Just plain vanilla dollar cost averaging, investing the same amount of money every day, every week, or every month. And you know, the difference is not big. I personally prefer to do it daily. I invest a little bit I do the dollar cost averaging. I put the auto invest on Binance. But if you do it daily or monthly or weekly, whenever you receive your salary, it's fine. But what's even better and performs here, as you can see, 2 times better than just doing the normal DCA all the time, is to do this aggressive SMA 200 DCA, which in this case will be buying Bitcoin whenever the Bitcoin price is below the 200 moving average. So according to this strategy that I show here, you will do DCA whenever the Bitcoin price is below the 200 SMA. And at the moment it is. So this will be like a good time to start doing dollar cost averaging, because over the 5 year or 3 years or whatever I have done this, I cannot recall now. You can watch the course if you want to know details, but it will perform much better if you do this more aggressive DCA when the price is below the 200 moving average. So I'll start buying a little bit of Bitcoin every week or every month whenever the Bitcoin price is below the 200 SMA. And if I zoom out and put like 5 years, you'll see that the results are pretty interesting. So yeah, this is how you could use eventually the 200 SMA. But again, I think I prefer to use my DCA indicator that I've done myself. I think you can find it on TradingView. If you search for it, or if you check my TradingView profile, you can for sure find it. But basically, this is just to say, oh, this is what I'm doing. And in the long term, Bitcoin is actually a less risky asset. Yes, there is volatility, but this is just part of the game. part of the fact that not that many people um, um, are selling Bitcoin, and there is lower liquidity in the market. All right, guys, that's all for this video. If you enjoyed the video, give it a like and subscribe, and I'll see you on the next one.